What's going on, YouTube? Welcome back to Wheeling Leverage. It's been a while. I've been busy, so I haven't been able to make any videos. But today is the day, and go over my portfolio, and also we'll talk a little bit about the market. As you all know, for the past 4 weeks now. So this chart here is of the SPY. I have the weekly chart and the daily chart, and as you know, for the past 4 weeks we've been going down. We seem to have found support on this 50-day exponential moving average. I have these three moving averages here. This is the 21 EMA, the 8 EMA, 21, 50, and 200. Those are the ones that are most widely used in the market for technical analysis. And as we see here, we drop under it, and it was kind of like a scary thing, because, well, not scary, but once we break through these big ones like the 50, the 200, that just tells you that we might be going in for more downside, right? But today we reclaimed it, and hopefully by the end of the day we're able to stay above it, and we can start moving up, right? So if we move over to the daily chart, we were right under the 200 EMA on the daily chart, which is also an important point to where a lot of times price will bounce from. But you always have to look at the weekly as well, and maybe the monthly if you want to. But I just kind of like these two time frames for reference as to where we are in the market and where the possible bounce points will be. Now, it's not an exact science. I know a lot of people hate technical analysis. They don't believe in it, and I understand kind of, but at the same time, I mean, these levels of support and resistance, and also these moving averages, a lot of times they price will bounce from them. Obviously, it's not 100%. It's not 100% proof that they will do that, but a lot of times they do. So it's good to have as a reference, but not as an all be all method of trading. All right. So anyway, so now today, since Friday, we had a nice little retrace up, and today we're continuing that retracement up, and we'll see how it reacts here once we get to the 200 day moving average on the daily chart. Let's see if it bounces back, if it's just like, a fake rebound up to the 200 and then we continue down, or if we're going to be able to go through this 200 EMA and then hold it and go up, right? So that's what's going on. That's what I kind of like to go by as far as the markets and the calendar for the market. We have tomorrow is Tuesday. We don't have much going on that's important to the U.S. market. As you all know, I like to use Forex Factory to kind of have an outlook on important events in the market. So I went through it before, but here you can see what country. So I'm interested in U.S., and I'm interested in the red folders, because they just mean that they're the most important. So for Tuesday, not much is going on. All right, these red folders pertain to Canada, which doesn't have much weight in the U.S. market. So for Wednesday, though, we have FOMC statements. And obviously it's a red folder, so that will move the market. So we'll see what happens. If it's positive, obviously we're probably going to go up. It's not, like I said, it's also not an exact science, so don't rely on any of this. This is just something like as far as technical analysis, and then looking at the calendar. It's just kind of like to give you an idea of what might happen, but never take it as 100%. Oh, it's it's a red folder, and this is what looks like it's going to happen, and so I'm going to go ahead and trade now. No, I use these as a means of hedging or protecting myself. For example, now I have around $8,000 in cash in my account, so I'm going to wait till this happens, and see how the market reacts, and then I'm gonna I will probably take a few trades, but nothing before this, because you never know what's going to happen. We can go up, we can go down. It might be baked already in the price of the market. So I always, like, when I see this, I'm like, all right, well, this is going to be some important stuff that's going to be said or whatever. So I'm just going to wait until 2 o'clock passes, see how the market reacts, and then I'll see if I make another trade. Okay, so that's how I use all these indicators per se. So now let's take a look at my account. If you've been following the last video or the last post I put on the community notes here in YouTube, you'll see that a few things have changed on my account. Basically, what I've been doing is I've been rolling all my positions. The market has been going down a lot, and I just keep on rolling, baby. So I just roll these 5. I used to have these separated puts on different strike prices, and I rolled out and down to the 37 put, and then I rolled them out again. So if right now, if we change this to order change, you'll see that over here I have 6 rolls. So I've rolled this 6 times, and on all those rolls I've ended up with a credit. So if the price by expiration ends above 37, then I will pretty much end up with a credit or end up at a profit. Same thing. As far as calls go, I'm doing a strangle. So I have 5 puts. I have 5 puts sold, and I have 5 puts, 5 not cover calls, but I have 5 cash secured puts at 37, and then I have 5 calls at 43 that are not covered, right? Because I don't own 500 shares. And then I have these calls, which I would consider my cover calls, because I'm using them as cover calls for these 200 shares that I have here at the price of $42. Okay, so if you're new to this, it might seem pretty confusing, but basically, in a nutshell, all I've been doing is just rolling down my puts. Let me show you here TNA. All right, so this is where my cash secured puts are at 37. Obviously, price is below my cash secured puts, and like I said, I'm not worried about it. As if you've seen what my strategy is about, I'm selling options on leverage ETFs that follow indexes. So that's the one of the things that keeps me sleeping well at night, is that, first of all, I'm selling options on indexes. So TNA follows the Russell. The Russell is not going to go to 0. At some point, it's going to come up. And if it doesn't come up, I'm just going to continue to roll out and down. So remember, I had these puts at 40, and slowly I've been rolling them out and down. So right now, these puts are 100, and I rolled them out to July 18, right? And it's a lot, but in these last 2 days of this bounce right here, right, we've been bouncing, so I'm back up to $1,200 some, and basically, like I said, I'm gonna keep on rolling. I'm not worried about it. So that's that with TNA. UPRO, also, I rolled it once. I had a 75 put. Let's go to UPRO. So I had a 75 put that I actually haven't updated this on the chart, but I'll do it here with you guys. So I had a 75 put that went under. I sold that put when it was, I don't know what this 80 is doing here. Must be an old trade. So I had a 75 put, cash secured put, that went under my price. So what I did was I rolled it down and out. So I'm going to edit, and I rolled it down to 70 for a credit. Okay. So now it's at 70, and it's above my put, obviously. And let me show you here. So when I rolled, I took a loss, and obviously because when you roll, you close for a loss and then you open another put, and I opened it for a credit. So after all is said and done, if this closes above 7, if UPRO closes above 70 in 95 days, I will be gaining $812. Now, am I gonna wait 95 days till expiration? Obviously not. So once I get 50% or 50% above my loss and of profit, I'll close it. You know, that 95 days, all these long dated expirations, that doesn't mean that I'm going to be waiting until then to close them. I'll just keep rolling, you know, closing for a profit, open, and I'm just going to keep following price like that. Meanwhile, I'm selling calls, right? So this one, 90 call, which I have actually, this one, this 92, I closed for a credit. It expired worthless for a credit, and then I opened another one at 90, right? So I'm expecting this one to close for a credit. I closed my calls at 50% or 70% credit, depending on how the market is reacting. But it kind of protects me as well. So if the market keeps going down, these calls buffer my losses a bit. And so that's what's going on with my account right now. And what else can I tell you guys? And yeah, so obviously it's been pretty rough for everybody that's invested in the market. Anybody that has a 401k or any type of money in the US market is been taking a beating. But with options, with selling premium on these indexes, leverage ETFs, although the downside is three times the losses, because it's leverage, right? When you sell options, you can always control your risk by rolling out and down, and you should always have a little bit of cash to take the opportunity. If if we get this down move, we can sell cash secured puts lower than that and farther out. So that's all I got right now. I don't want to make this video too long. I'm going to make another video on some of the tweaks I've done to my strategy, because after this downturn, obviously I would have rather been in a better position, maybe had some more cash in hand. Maybe I should have not let 200 shares be assigned. Maybe I could have let 100 shares be assigned. That way I have more cash to sell more puts on this down market. Maybe I could have had, maybe just $20,000, or I'm sorry, $15,000 in cash, knowing that the market has been super oversold and it was kind of teetering here. At this point I could have said, this is super overbought, and at some point we're going to have a big drawdown, so I should kind of stay cash, or not have more cash reserves than trades live in the market. So there's a lot to learn from this. I'm happy that a lot of the things that are included in my strategy has helped me stay calm and be able to roll. And so there's a lot of positives and some things that I was able to think about and tweak in my account that I will share with you on my next video, so this one doesn't become too long. All right guys, that's all I have for now. I'll get another video on the tweaks that I made to my strategy that are different from the video I have on the first video that I have. All right guys, if you have any questions, as always, put it on the comments. I'll be prompt in answering your questions or suggestions. All right guys, thanks.